Of course, the festive season is just around the corner, and here to discuss the kinds of trends we can expect from the retail sector is Derek Engelbrecht. He's retail and consumer product sector leader at Ernst and Young. Derek, thanks so much for joining us this afternoon. Well, looking at the 2012 fourth quarter sales growth outcome when it comes to the survey, being highlighted is conditions remain challenging for the retail sector during 2012, and we've seen slower growth come through, slower sales growth coming through, slower perhaps, but to what extent does that bring you comfort in that perhaps we're looking at a more sustainable growth path moving forward?
So the respondents of the survey effectively confirmed that there's an increasing number of retailers that are satisfied with prevailing business conditions. That measure has ticked over slightly from about 46 to 54%, which is broadly in line with the 56% that was registered in the 2011 festive season trend. So I think you're right, a lot more temperate, a lot more moderate, and therefore probably by definition more sustainable.
Derek, if you have a look at the importance of this holiday season to retailers, I think I was watching CNBC's international offering a couple of days ago, and there was an analyst on there saying that up to 15 to 20% of earnings or revenue, I can't remember which measure it was, can be attributed to this time of year. So incredibly important. And yet we had Grant Patterson from Massmart coming out yesterday and saying that he doesn't think that the festive season is going to be that important this year because there's been such good steady growth throughout the year and it's not going to spike. Would you agree with that?
I think there's a measure of being quietly confident but not hugely optimistic. That's something that will so fundamentally change. I do agree with you. I think in relative terms, the next 6 to 8 weeks until we get to the end of the calendar year is a disproportionate contribution to the bottom line. Euphemistically also referring to the so-called Black Friday concept in the US, where anecdotally it's on this particular Friday that for the first time some of the retailers on a calendar year manages to put some real cash and profits on the bottom line. So I think that the Massmart insight is something that certainly is echoed through the trend survey, where that volume growth, looking at index levels and actual historical trends, is forecast to be between 3.5% to 4.5%, where in 2011 the view was that would be between 7% to 8%. So I think the Massmart sentiment is certainly reflected in the broader retail trends from a much broader constituency.
When it comes to those trends, quite mixed fortunes within the various components in the retail sector. If you're looking at durable goods, non-durable, and then your semi-durable goods, so run us through the kind of trends that are playing out there.
The semi-durable goods, which is the footwear and the apparel companies, continue to outperform durables and non-durables. The semi-durables have obviously benefited from a continued focus on value for money. We've seen that they've been the outperformers consistently in relative terms. The durable sector, which is the household appliances and furniture, I think quite frankly is disappointing, and they've been lagging a level of optimism for a number of reporting quarters now. But particularly electronic goods and furniture really not performing even in that low expectation environment. And then the non-durables are slightly more optimistic than the durable sector, but still lag significantly behind the footwear and clothing companies.
There are, of course, opposing forces in this when it comes to surveys like this and times of year like this, Derek. On the one hand, I was talking to Tiger Brands a couple of days ago on the occasion of their results, and they were talking about people actually trading down. They put it in a very flowery way, but the genuine message was that people are looking for more economically viable product alternatives, something like that. When it comes to this time of year, though, emotions take over and people just throw caution to the wind and say, I know I shouldn't be spending this amount on this present, but I'm going to do so. So naturally there's a spike, especially when people have had quite a difficult year.
I think I agree with you, especially the non-durable sector, which is the segment broadly served by a lot of what Tiger Brands does. At the end of the day, that's where consumers trade down. That's where they look for more value for money. That's where they prefer or experiment rather with dealer-owned brands, private label, and end up redefining what they consider to be value for money. There is a natural tendency to be more, or to throw caution to the wind, to agree with your statement. I do think that the South African consumer has, however, seen how doing it irrationally during this time will bite him or her come January, February, which is traditionally long months, and even longer if you've really been irresponsible during that festive season.
To what extent do you see that kind of sentiment driving activity in the durable goods segment? Because highlighted in this report is that we've seen an escalation in the rate at which input costs are factored in, and retail selling prices as well. And of course, retail selling prices affected in a very big way on products that are imported, especially with the rand sitting where it is this afternoon.
So the durable sector is very exposed to significant rand depreciation. One needs to take into account the lag time in the supply chain. So what is today on retailer shelves as far as imported electronic goods are concerned were probably bought in August and September, just from a pure lag perspective. But I do think that despite the fact that we're in a low interest rate environment, there is this tempering of that kind of purchasing pattern where people are just not replacing things that aren't broken. So they'll last another few months, maybe another year, and on the basis that it's not an absolute need but a want, people are just effectively continuing to defer the purchasing of those durable goods.
Again, the holiday season could be a double-edged sword for retailers, Derek. I mean, we've got so many pressures on the consumer. There's high unemployment, there's high utility charges, all sorts of things affecting our purchasing power. If there is a good holiday season in terms of spending at the retail level, of course, that could lead to the retail hangover in the first and second quarters of 2013. So, okay, everything's lumped in to November, December, January, even a little bit of January with the sales and everything. But after that, when people's credit cards are up to the limit and their borrowings are shot, that could be quite impactful for retailers.
Very much so. So effectively all that you're doing is you concentrating or focusing the spending patterns in the last part of the calendar year, which effectively means that there's nothing left to ambitiously spend. We do know that people have to commit to some significant back to school expenses in the new year when one looks at that as a significant outlay. And I also think that the potential impact of some of the labour activity and strikes that we've seen, most notably in the mining sector, the transport sector, and most lately in the agricultural sector, will also have an overhang on how people are looking at potentially rehiring and how they reshape or refocus their labour force. So I think the risk is certainly on the downside, irrespective of whether people do irrational things during the festive season. So putting those two things together, I agree with you. That the survey also suggests that sales volume growth will continue to moderate in the first half of next year.